Hi Mahesh. A few months back, I remember very clearly we were seeing a bull run which was kind of not seen before. And suddenly, because of the global conditions in the economy as well as the inflationary pressure, we are seeing the current changes in the market. So, how do you foresee that going forward?
Yeah, so markets clearly have, since the beginning of the year, a lot of things have changed. More for the adverse. We have seen the inflation shoot up beyond expectations on the back of the Russia-Ukraine conflict because of the supply side issues. Then we've seen, as a result of that, the policymakers, the central banks globally, including the Fed, have taken a very hawkish stance and talked about severe rate hikes in the next 1 year. And we've seen the bond yields, US 10-year bond yields shoot up to almost 3%, and then it's cooled off a bit. And on the domestic front also, we've seen the policymakers, RBI, has talked about now increasing interest rate a bit sharply. So clearly things have turned for the adverse, and as a result of the increasing interest rates and a bit of tightening and withdrawal of the global liquidity, what we've seen is the global growth has clearly slowed down. So there have been downgrades to global growth by around 100 basis point, and earnings outlook is also kind of turned adverse. But I think amidst all this, I would say that most of the negatives are now looking to have been priced in. The bond yields also, which had rallied the US 10-year to around 3%, is now kind of cooling off. Inflation, US inflation touched past more than 8%. That also seems to have peaked out. And we've seen now, because of the tightening measures which have been taken, there has been a slowdown, and that is affecting demand. So inflation is likely to cool off from here, though slowly and steadily. And the Russia-Ukraine conflict also, while it still remains there, I think the supply side challenges are likely to ease off a bit. Even China, which had gone into a lockdown recently after the second wave of COVID, is also starting to normalize. So I would say that while a lot of negatives have happened in the last 3 months, and that has changed the outlook a bit on the adverse, but I think from here on, I think looks like a lot of the negatives are getting priced in. And I would say market have also corrected. We've seen a good correction in the global markets. US market is down more than 20%. NASDAQ is down almost 27% from its peak. And we've seen around 14-15% correction in our markets also. So having seen this correction, now the valuations are looking fairly reasonable. And earnings growth also, there has been some downgrades to earnings. So I would say that the near-term outlook still remains a bit challenging. You could see markets more volatile, what we've seen in the last 3 months, that can continue. But all the negative sentiments, what we've seen, I think some of those things can start to ease off down the line. So the long-term picture, if you look at top-term and long-term bull run, at least what we believe is that India growth story is still fairly intact. When we came with our beginning of the year outlook, we said that this is the time for India. India's time has come. A lot of sectors were firing now, including manufacturing, investments, consumption, which was weak, is also starting to pick up. Exports were doing well. The whole China Plus One policy is benefiting domestic exporters. Indian IT sector is also benefiting from the huge transition happening globally onto digital. And that would take our GDP growth to around 6.5% or so. I think that still remains intact. I think there is slight kind of a hiccup to that in the next couple of quarters. So I would say that the overall uptrend in the market, what we're seeing, I think that still remains intact. I think we are still in that trending market. But there is a pause, there's a correction which is there. And I think once things stabilize and once inflation starts to kind of moderate down, I think we should see the markets again starting to scale higher.
That's happy to note that a lot of things are getting normalized, including the global markets and the supply side, pressures and all. So in that situation, what do you feel? What are some of the big themes for ABSL AMC in terms of investing into, so that retail customers are kind of benefited?
So last calendar year, it was reflation in the global economy, and we saw all the global cyclicals do well, including metals, then some of the export-oriented companies, even the IT sector did very well. This year, because uh, the increasing interest rates and the slowdown is much sharper in the global markets, I think the focus will be more on going forward on the domestic linked sectors. So we are more positive on sectors which are linked to the domestic economy. And that would include sectors like banking and financials. So banking sector has kind of underperformed in the last 2 years. And now I think as we look forward, we are seeing credit growth now coming back into double digit growth. Banks have gone through the large NPA cycle, and we see that normalizing. And initial period of the rate hike, normally you would see that the banks tend to benefit because your loans, okay, get repriced much faster. So in this backdrop, I think if India's economic growth is going to go back to around 6.5% GDP over the next 2 years with the long-term trend growth, I think banking sector would be a good proxy to play that. And the valuations there in the banking sector are also fairly reasonable. So that's one theme which we like over the next 2 to 3 year time frame. Apart from that, India has always been a consumption story, right? And discretionary consumption has been a long-term secular trend where we are seeing per capita income as it goes up. A lot of demand for discretionary items tend to go up. And I think that trend will continue. There has been some impact recently because of higher inflation and interest rates going up. But I think as a secular theme, that sector looks good for us. There's a lot of penetration, there's a lot of under penetration in a large categories, okay, which will continue to benefit companies in the sector. Also move from unorganized to organized, which kind of accelerated, okay, during COVID, is like to benefit the consumer discretionary names. This includes companies in the retail space, consumer durable sector, the home improvement side. So all these, I think, should do well from a longer term perspective. So these two are the broader themes, I would say, which we are positive on. Apart from that, we are seeing a revival of the investment cycle after a long time. It's still early days, but private sector capex is likely to pick up, and the whole government focus on Make in India and the production link incentive schemes which have been given is seeing a good traction. So the whole industrials and the capital goods sector is also looking on a revival path.
So according to you, the asset allocation or the portfolio building would be in some of these categories like the discretionary consumption, the infrastructure spends which is happening, the banking and the financial services sectors, and maybe few more that you have mentioned.
Right. Yeah. So that those would be the longer term themes. Okay, which one would be bullish on?
So Mahesh, another pertinent question. You see, recent past, a lot of IPOs, different types of IPOs are kind of getting into the market. What do you feel as a money manager or as an investor? How do we kind of approach these IPOs from the investment theme perspective?
So yeah, the IPO market was very hot last year. We saw a flurry of IPO across sectors, and some of them did well, others probably didn't do as well. I think as we move forward, I think because of the current market scenario, I think the retail appetite has gone down a bit. But I think there are a lot of good companies, okay, which are coming in. I think the good thing about India is there's a lot of diversity. There are a lot of its entrepreneurs coming in with good business model. And only thing is that we have to be much more careful in terms of investing in the IPOs and trying to evaluate and see valuations, because in the euphoria last year,
right,
a lot of companies came at much higher levels. But I think now with more sanity coming in, I would say that the valuations have also kind of moderated over there. And we look at IPOs selectively where we like the businesses, the long-term businesses where we want to own, and where we think that the valuations are also probably better than what we have in the listed space. I mean, that should be the criteria of evaluations, okay, while investing in the IPOs. And there are a lot of new companies which are also coming in, which especially in the technology space or the new age technology space, where because of the meltdown in the global markets, I think we are seeing some of these companies which were planning to come into the market. I think you will see that pace slow down,
right,
and until there is stability in the global technology space.
So coming to maybe at the end of the discussion, I think we have seen the euphoric bull run in the market, but now do you see time to fasten the belts or maybe moderate expectations? going forward in a shorter term, longer term, we know that it's going to kind of again come back to the returns. But what do you see for the shorter term?
So this year, as we said earlier, year is going to be the year of consolidation, where we see normalization of whole policy environment from easy liquidity, low interest rates to higher interest rates, withdrawal of liquidity, and that is what is happening, right? We're seeing movement across asset class from say equity, to debt globally, and on top of that, we've seen higher inflation. So this is a period where P multiples are getting normalized. So a lot of stocks where the multiples were higher, even market P multiples had gone, that is kind of normalizing. We are still not seeing any kind of a major impact or dent to earnings, at least on the Indian corporate side. So given that, I think once the P normalization happens this year, and which to a large extent it has happened, I think going forward, if you take a 2 to 3 year view, we expect that corporate earnings growth would still be around say 13-14% over the next 3 year time frame. And post the current normalization P multiple, I think that is the return what people could expect, right? Or probably slightly lower, because in a higher interest rate environment, the market will tend to give a slightly lower multiple. So I think slightly lower than the earnings growth is what returns I think you should expect from the market, which is still a very good returns for investors to look at, considering the fact that where the returns are there in the other alternate asset classes. So this is a period where one should not expect too much return, a period of consolidation, and any large corrections, any correction in the markets because of short-term volatility should be used an opportunity really to
build up
a position without being too aggressive. So the best way is to go through the SIP route, or probably an STP route over the next say 3 months. I think market probably looking at the current negativity, I think it should, if at all, bottom out in the next 3 months.
Right. So on a long-term basis, we'll see a kind of growth story intact in India, and we see a lot of new customers coming in. So I think, as recommended by you, SIP should be the best way to go ahead and start your portfolio to start with, and STPs if there are lump sum amounts available with you, so that you can continue to build your portfolio.
Yeah, so because at this moment there is a lot of fear which is there, a lot of negativity, and people are wondering whether there could be a correction here. Yeah, I'm saying there could be some more downside from here, but you will never be able to catch that bottom.
Correct.
I mean, as valuations or risk reward starts to look favorable, I think one should start making the investments. And when you buy a stock at a right price, I think long term we've seen that the value emerges over there, right? And one should see fairly steady returns, right? At least in line with the long term average.
Thank you so much, Mahesh, for the insightful discussion, and we look forward to having more discussions with you in near future. Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।